Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of NIO, ticker symbol NIO. And so I am recording this during market hours on Monday, March 4th. So this number will be changing, but it does look like price is right around $5.40, being down about 6.5% so far on the day. But it is what it is. And one thing that is exciting about the chart is that earnings are going to be reported tomorrow morning before the market opens. And I will be streaming that event. So if you'd like to tune in for the earnings call tomorrow, I will be streaming that, and that begins at 7 a.m. Eastern. But I will probably be starting the stream about 15 minutes early just to make sure everything is set up just right. But yeah, it should be great. And also, that will be available on the channel for you to access after the fact if you would like to tune in then. But yeah, coming back to the chart, I just want to go over some levels that stand out to me as we do prepare for earnings. And so with that, I'm just going to throw up these drawings that I've done. Most of them I went over in previous videos. I did clean up some of the levels so we can go over basically how the stock has been trading over the past week. And so we can just look at that and see where we might be going following earnings. And so the last video that I put out was on the trading day of February 27th, so last Tuesday. And yeah, it does look like on that day we did get rejected from this 50% level from the retracement coming down here to the low that was hit on Friday, February 23rd, being at a price of $5.37. And so it was rejected at the 50% level at a price of $5.85, nearly getting up to the 382 level from this retracement here at a price of $5.94. But unfortunately, the high of the day was $5.93. So just barely, almost got to that level, but did not make it. And following that day, we did get a gap down, hitting a low on the day of February 28th at a price of $5.39, but closing at $5.43 exactly at this red line, which is the 1618 extension from this Fibonacci retracement over here, which has served as a good level of support, a dip buying level in the past. And so I do think it's pretty interesting that price did find support there before continuing higher over the next couple days, but then ultimately being rejected at the 50% level from this retracement here at a price of $5.82, hitting a high on Friday, March 1st, of $5.84. So just 2 cents above that level, being 1 cent below this 50% level. And now we did gap down today on Monday, March 4th, and the low of Friday was actually at a price of $5.68. So there is a potential gap to the upside for us to be filling there. So I do think it is good that we are moving our way into earnings with a gap to the upside. Potentially, we will be filling it if the earnings report is good. But one thing that is perhaps a little concerning is that we have broken below this previous low of $5.37, thus far having a low on the day of $5.34. So it is quite possible that we will be going lower, potentially to this previous low at $5.30, marked by this orange and yellow line here. But one thing that I do find pretty supportive of the stock moving forward is that we are currently above this white downtrending level of support that I view as the base of this falling wedge here. And so since we are at the bottom of that wedge, I do think that there is plenty of upside for the stock, and I do think that earnings could trigger a bottoming in the stock, and we could start to see maybe a wick down to below $5.30, which could represent a great dip buying opportunity, potentially going lower than that to the white downtrend, maybe around 525 or 520. But I do think that price could be making its way up higher, like to above these previous highs that were hit on February 16th at $6.34, or making our way back to $7 a share, marked by this purple line, also corresponding with the 1618 extension from this retracement, as well as the 382 from this orange retracement at a price of $6.93. And then again, we do see that there was a low hit here on December 1st at a price of $7.01. We do have a confluence of levels here suggesting that we could be moving back to that level, but if we do get there, I do suspect it will act as resistance, as we do see a pickup in the volume shelf, and really getting back to $7.16, where we see this gap that was formed on the way down. There is a notable shelf just above that, and so I do think it will be tough to be breaking above $7 a share, getting to $7.16. But I do think that with earnings coming up, we might be getting there, and if we do get rejected there, we could be pulling back to this lower volume shelf, which would be returning to a price of right around $6.15, corresponding with this 236 level from the yellow retracement here at a price of $6.09. So potentially, if we do rocket up tomorrow, it's quite possible we will be pulling back to around $6 a share. So do keep that in mind. But those are just my thoughts, and if you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.